Hey, good evening and a very warm welcome to the India Market Review for the week ending Friday, 19th August 2016. And well, we are starting a little early today. Well, honestly, would love to watch the match of PV Sindhu badminton finals live, and fortunately that got postponed by an hour, looks like. So hoping to do our IMR and complete it fully before the match starts, right? Otherwise, it would have been bang in the middle of the match time. So without wasting any time today, uh, or blabbering on unnecessarily, let's jump in and look at where the markets have been. So if you attended the last two IMRs earlier to this on the 12th and the 5th, you would have seen that we discussed the Nifty stocks and then the Nifty next stocks. So altogether about, not about, exactly 100 stocks, out of which about 20-25 have done really well. And had you invested in those calls or views or analysis, I'm sure you would have made some amount of money. One of the things that we have been saying about the Indian markets for the last 2 weeks has been that are they bracing themselves up for a new life high? This is especially in the context that the US markets are all gung-ho and up. This is the Dow Jones Industrial Average, and as of yesterday, consolidated. It looks like a double top at this point now in the US markets, but this is a breakout that has happened after actually quite a bit of consolidation. So I personally don't think the story is over. That's the Dow Jones, and then if you look at the S&P 500, you'll see more or less a similar story there, and the S&P 500 is actually a little bit higher, as you can see. That is of yesterday. And if you look at the Nasdaq, that's just about barely broken out and made a new life high. Quite a few economic reports and economic news has been quite healthy and positive out of the US. Therefore, uh, on the fundamental side, sentiment side, things looking I think pretty okay. Uh, Right. So so like I was saying, you should be seeing the Nasdaq screen on your side, and all the U.S. markets looking quite healthy. And if you look at DAX Germany, that's not really gone up much, but it has consolidated again after an important resistance zone of around 10,500, and indicators wise I would think still showing definitely quite a bit of strength, right? So that's good. And looking at the CAC, right? So that's been a laggard in the whole of Europe and still continues to consolidate between that 4,100 to 4,600 levels. So really nothing much to say there. If you look at the Nikkei is again struggling with that resistance. So India is not the only country which is right now a bit lagging in overall terms of performance. But then that's just the nature of the game, right? And then at some point we're going to probably see a move out of the blue perhaps. Especially on the Nikkei, just noticing this sitting at an important resistance of around 17,000. Looks like a good consolidation move is probably getting complete in my view. In just a matter of time it breaks above that, and then we're going to quickly see 18,500 on the Nikkei, right? So US leading the pack, Germany also doing a little bit, and the rest of the world including India not really up there and catching up, but the NSE 50, the Nifty, that's just about there, consolidating, as you can see. This is updated till today. Let me get a clean chart. Right, so you can see that we really haven't uh, done much, more or less a consolidation. If any of us know Elliott wave, looks like a sort of sideways corrective type correction, but the trend is more or less very much still intact. So we'll just have to let it work itself out and ready itself for the next move, in my opinion. Next week is also expiry for the contracts, right? So 25th, 1 week from now. So there might not be much of a move, you never know. Last month I think there was a surprise move just before expiry. This time nothing, no triggers that I can think of, except who knows, PV Sindhu's match is going on, and if he wins the gold, you just need an excuse. The market could jump on Monday morning by a percent or two. So anyhow, so Indian markets more or less in a sideways zone. Having said that, if you look at uh, you know Nifty Junior, that's actually hit a new life high. It did that already last week, and continues to just stay there. And today you can see that the mid caps continue to, in a sense, outperform the market, quite a bit away from the long-term moving average. So MACD would be quite strong. Uh, yeah, so what's definitely interesting is a negative divergence that you can see on the uh, indicators, right? So there you have it. But this sort of divergence would be expected in a bullish market, as you may all remember. So to be taken with a bit of pinch of salt, not definitely not to be shorted, but on the other hand, uh, the uptrend just consolidating before it goes up. So the Nifty next, or the Nifty was 12 Nifty Junior at its life high, but the Nifty itself is clearly taking its time to get there. Still about 300 points away, right? 250, 300 points away from the life high on the Nifty. So we'll just have to wait and watch. Okay, so let's jump into the uh, sector indices and see how they are going. So you should be looking at the CNX 500, and that's also, so that's the broad market index with a lot of mid cap stocks in it. And what's interesting is that if you look at the picture, more or less a copycat of Nifty, except that it's made a new life high, which the Nifty has not. So the broad market, mid cap market, definitely doing better than the uh, large cap stocks, right? Okay, so let's look at which sectors are doing well. Bank Nifty, wow, okay. So what happened here? Okay, so finally you can see that, just want to make sure this is, yeah, 17th, 18th, okay, just hold on a bit. Right, so we were talking about the Bank Nifty, and there you have it. Just patience, if you were long. Almost 3 weeks, 1, 2, 3 weeks of consolidation on the Bank Nifty, and yesterday that's the breakout candle, and today another doji, just marking time essentially. So the next level on the Bank Nifty, well, I would say most probably the life high, but we could be anywhere around that also. 20,000, so another 600 points up from here. That would be a psychological mark for it to reach and then go back to its life high. And if you look at the PSU banks, those have really jumped. BOB, Punjab, SBI, etc., leading the way. So we mentioned about this flag a 2 weeks back, and a real surprise, broke out and then sort of got beaten down, and then just that big massive move, and it's just continued to rise after that. If you had even missed this breakout, or if you had squared off and squared off your long and closed it at a loss here, the next day when you got this, every reason to just get back in to the market. Yes, and looks like the PSU banks might be leading the gains on the Nifty. Let's see. Anyhow, one thing to notice is today the PSU index is up, but the bank Nifty was as a doji. So the private banks probably not really up to the mark. Right. One sec. Right. Sorry. I had not shared the screen. So I was talking about this flag, breakout that happened, and the PSU banks leading the day today, but the bank Nifty had done a doji today. So the private sector banks sort of a laggard today. Where is that BSC? Right. Okay. All right. So definitely, if you're looking at the banking space, the public sector banks is the place to be now. I think not so much the private sector banks. That's quite clear. If you look at realty, well, that's definitely consolidating, no doubt about that, and the trend is definitely up. There's no doubt about that either. Not sure what the trigger could be. Right, so that's clearly a sideways consolidation going on reality. Just have to wait and watch and ride it out. Power has, well, taken off yesterday. Today again, uh, spinning top type candle, and power is definitely set to go back to 2200, etc. So power is a place to be in. Metal index is definitely a place to be in. We spoke about this flag 2 weeks back. Notice nice breakout on the flag, test of that back to the support. You can see how nice and specific and sweet that test actually is, and then it continues to go back up. So metals definitely a place of action, looking after consolidating for again about 3 weeks. And then capital goods, well, so those have certainly slipped, and definitely a bit of concern, I would think, in my opinion. So that would be a support level to watch out for, but this looks like a bigger correction in the works, right? So in a sense, if you look at the weekly chart, we've had a one-way move from 11,500 to 16,000 and no meaningful correction on the weekly charts. And go back to the daily charts. There is a correction, move up, probably a leg down could happen till about 14,500. So wouldn't be in a hurry to jump into capital goods right now. I mean, it's taking support, but a little bit, I would say, weak support, a little bit iffy. Would rather stay away from capital goods space. Consumer durables, the festive season coming up, close to their life high, I must say. and I would say looks like they're all consolidating. Maybe a little bit premature, maybe sometime mid-September or all that. I think would be the breakout move from 12,600 and much higher. Autos have done really well. Already had made a life high last week and continuing their I think the trend. So a bit of a correction, but nothing really to be concerned about. If it doesn't cross 22,000, if it goes back there to that level of around 21.8, watch carefully. There's one thing I can definitely say is that valuations wise, autos are on the expensive side, which reminds me. So we will do a deep valuation review of all the sector indices sometime next week. Not sure when that's going to be. We'll announce the timings, etc. We have to do it in pieces. Will not be possible to do it all together. Actually, we can, but let's see. Anyhow, actually doing it all together will give us a good way to review and then distill down as to what might really be a good place, the better places to go long or short from a valuations perspective. Okay, then looking at pharma. So pharma looks like it's coming out of correction right now. It's taken a lot of how would I say, about 3 weeks down, taken a lot of time testing its supports on the long term moving averages from 50 to 100 to 200. Nice hammer, nice confirmation. Definitely a break of the multi-week, or we are just there, right? So just there. Watch that. If that break happens, then breakout happens, then 11,900 should be a good place. With the setup that there is, looks like a low risk entry point available here on the pharma space, right? Okay. From just notice, so saying might also be hmm, so from a Elliott wave perspective, this is probably point 0 right down there, and you have wave 1, 2, 3, 4, and wave 5 of 2, sorry, 1, 2, yeah, 3, 4. Wave 5 of a bigger degree 1 is in the progress, right? And then maybe we come down again. Let's see. Yep, quite possible that's the case, right? Okay. Some I think positive news coming out on the pharma side, if the FDA approvals for some generics, etc. That, yeah. Okay, IT. All right. So IT really not going anywhere. Something we've been saying for a few weeks now that IT is probably not the place to be. And if you watch the IMR 3 weeks back, he specifically did say that IT was the only place that should be shorted, right? So that's on record. Go watch it. And if there was any weak spot in the market, then it was IT, and that's well clearly borne out this week. 5 straight red candles, quite big ones, and looks like yeah, on the weekly chart, perhaps going down to 10,500 or even lower, maybe even to 10,000. So we'll have to wait and watch. So IT continues to be weak, and absolutely wouldn't want to be getting into it in any hurry long side. As a matter of fact, if it breaks 10.6 especially, then I think one can short it to 10.4, 10.2. Unfortunately, this index itself is not traded, so we'll have to look at specific IT stocks for that. So IT the place to short. Everything else is either wait and watch or go long. CNX Infra, okay, generally has been moving in tandem with power index. Capital goods down. Infra, however, I would say perhaps looking to set itself up to go up, but index wise not looking any, it's not looking compelling to get in right now, but individual stocks might be. It's definitely on the long side though, the infra also, given that it's been able to break through the long-term moving averages over the last month or so. Okay. So that's the quick sector review. So apart from IT, which is clearly on the short side, looks like everything else should be looked upon from either wait and watch or go long perspective. But let's finish off IT first. So we'll start with Wipro, and well, Wipro has broken its support, very important. 510 is the next level for it to go down to, and actually looks like the volumes are slightly picking up, just ever so slightly. They were very low in the about week before that, and now only slightly picking up, and the MACD is just opened up to the downside, so have the short-term moving averages. I think 510 or so is a near certainty now. And look at that big picture. We mentioned this also 3 weeks back. Looks like a big, you should see it on the weekly better. Right there we have it. Pretty big pattern, head and shoulder complex, and today's weekly candle going down. 520. Well, if you look at measuring implications wise, we're talking about 140 rupees, right? 120, 140 bucks. So 420, 400 to 420 easily is the measuring implication according to me, right? So okay. If you look back in the history, just trying to see if we have any supports in the past, and that would be the place to look out for, and that is at 410, right? So how convenient is that the head and shoulder uh, top implication for Wipro is 120 rupees, 140 rupees down. That coincides nicely with a support zone around 400 to 420. So that is what I would definitely watch out for. Definitely a lot of trouble on the IT side, looks like. So that's Wipro for you, and shouldn't be surprised to see more bad news in the other IT places. There is Tech Mahindra, and that's also given way this week, gone from 500 to 473, just taking support. Definitely, I don't think the fall is over according to me. This is most likely going to perhaps 440 or even lower. Hmm. Okay. Looking at TCS next. So TCS was on its way to make a new life high, but could really not achieve that. And well, honestly, we're just retraced from there, and today has gone down on high volume, right? Uh, what's perhaps maybe of some solace is that a lot of long-term moving average is sitting there, but I think 2550 to 2500 is quite definitely on the cards. Nice stop loss at around 2670, 2660 on TCS, and once below 2500, then 2450 or even 2400 is a distinct possibility. Right, so that's TCS, and then we've got Infi. So we spoke about this flag on Infi 3 weeks back, if you remember, and we did say most probably it is going to break on the downside. That's exactly what has happened this week. It tried to rally up, as you can see, on Monday. Really couldn't sustain. You've got that big upper shadow, and then just broke down, gap down actually. We gap down open on Tuesday, right? Sorry, this was last Friday. Um, Monday, Tuesday, Wednesday, Thursday, right? So on Tuesday, and then continues to go down. If you look at the your flag pattern, you're talking about almost 1200 to 1080. So say 100 rupees just to be on the safe side. 1060, 100, 960 minus 100, 960 is the target, and that's, well, how nice. We've got a support line sitting there at about 950, so we should look at Infi going down to 960, 950 levels in the coming week. I think there's no doubt about that. It's almost a certainty in my opinion, and the volumes on the downside definitely have also picked up. No strength in the indicators, absolutely nothing to perk up this stock technically. So yes, and so this is the price volume study chart that I have, and quite clearly it's been sold off on massive volumes. You can see the big drop in OBV PVT, and that's just trending further down. So all in sync, no divergences of any type. So if you are in the IT space, if you're in any of these stocks, then clearly they should be exited on the long side, and some good opportunities to short. Just to sort of put the nail home, the this IT index was identified as a good short 3 weeks back, but for 2 weeks essentially. So for 2 weeks after, or not even 2 weeks, actually a little less. So for a week, 10 days after that IMR, really nothing much happened. It either went sideways like this, or if you take the case of Wipro, just sat above this support line, but eventually and pivoted and danced around with these long-term moving averages, but eventually it broke down. The point I'm trying to make is of patience. Of once having found good setups, you just need to then just be patient, follow through, and be very, very what do you say, um, determined to, as long as nothing has dramatically changed, there's no reason to change your view, your position. Just wait, and it's a question of patience and discipline, right? Okay, so IT space definitely headed further down. Okay. So now let's look at well, I would say let's look at the, oh, I think yep, let's look at cement. Cement's been just caught my eye sometime this week. Ultratech started a move, and after that, I think all the other cement companies have followed through. And what you should see on your screen now, First is ACC, and then I've switched to Ultratech, and that's what you should be seeing now. And if you notice, Ultratech making new life highs. It made a new life high uh, last week itself, consolidated, and then now has gone up. And you can look at how the volumes are very much supporting the stock to go higher. I think this is a 4,500, maybe even 5,000 rupee stock, just a matter of time in terms of getting there. Essentially consolidated for one about 12 to 15 months, depending on when you're counting it from, and then started a move in May, June this year, and has just kept going up. So Ultratech, I think, would be our top pick from the Nifty cement stocks. And then if you look at the others, we've got ACC, and ACC after a small scare last week, big red candles. Look at the good volumes this week, entirely green and healthy, and this is in my opinion setting itself up to go to its life high, 7,770, not next week, perhaps later. And then it'll be really crucial to watch out as to what happens at around that 1770, 1800 levels, because once it crosses that, then this stock is definitely heading to, I think, 2000 or even higher, in my opinion, as far as ACC is concerned. It's rather right, Ambuja Cement, both of them, if you look at ACC, then you basically know the picture of Ambuja, and you can see how very much similar they are, except in the larger picture, except that in the shorter time frame, it's just that you've got a nice triple top there, nice consolidation, and just a question of time before it actually moves up. Okay, so there you have it. It's going to do that most probably next week, I would think, and once it does that, then it's life high, not very far, and then quite easily 300 rupee stock. And if you look at it in a much bigger perspective, you're looking at weekly charts now. In the weekly format, you can see from 2009 to 2013, sort of 4-year up move, 13, 14 consolidation, 14, 15 again up move, 15 consolidation correction, 16 has been an up move and brings it to its life high. But from here, I would think after this big sort of 2-year, 1.5-year cup-like consolidation, it could perhaps go much higher, and who knows, another $100 on this, 400 rupees on this is something that cannot be ruled out. That's for sure. So if you're willing to hold on to this for 6 months to a year, I would not be surprised if this puts on another 30 to 50% from these current prices. So just hold on tight. You could get a correction when the market corrects to some extent, but from an investment long-term perspective, it's looking quite okay. Okay, so Ultratech, Ambuja, all good opportunities. The other stocks that, or the other sector that we said is perhaps looking, quite well set is in the banking side, the public sector banks, not so much the private sector banks. So let's start, doing a public sector bank review. We should, well, not should, but let's start with the State Bank of India. So SBI, first of all, what's to be noted on SBI is that big green candle, uh, 1, 2, 3, 4, 5, yeah, on Monday, and that was on exceptionally good volume. Then 3 days of consolidation, Tuesday, Wednesday, Thursday, and today, Friday, it has decided to move up again, right? Uh, oh, indicators wise, oops, I hate this. 1 second. So SBI essentially broke out of an important resistance zone around 245, as you can see, and then has gone up on really good volumes. I think now it's really in a sense free of short-term resistances, and the next level to really watch out on SBI according to me would be there. Okay, so that's around 280. So we are 260, another 20 rupees on SBI should definitely uh, happen. I think maybe even next week, right? And then after that, we're not very far from its life high. 1 sec. Yeah, life high there of 2010, which is pretty old, almost 6 years back. Once it comes to around 320, that itself would be a major achievement. And then I think after that it really sets itself up to go to 350 and possibly much higher. So this is something I would definitely be looking at. You're looking at what, almost a 40 to 50% return from current levels, right? So that's clearly a impressive thing, and one should follow this up. So even if nothing else, buy it in the spot market and just leave it. Then if we look at Punjab National Bank, well, probably here is a chance if you feel left behind of a stock which is probably getting out of its consolidation. Okay, this is clearly a wave 3 on Elliott's wave 4, and can't be sure wave 5 is starting, but quite possibly it is. 145 is looks very possible. Only hesitating because of the volume, but I would say consolidation phase, and once it breaks out of that 145, then 180 is a very distinct possibility on PNB. Right? First of all, what a move, 70 to 140, that itself was a doubler. And then we look at Bank of Baroda. So that was another one that moved today along with SBI, and you can see in a sense the volume picture is very similar to that of SBI. Good volumes today, good up move, almost a Marubozu type candle, and setting itself for 175 in my opinion, dancing around with the long-term moving averages, but once it breaks 175, then 190, 200 looks possible. Though quite honestly, I think of all the setups we've seen so far, SBI looks the most appealing, given the way that it doesn't have much resistances on its way up, but others, Bank of Baroda, definitely does. Right. What other banks do we have? Public sector on the Nifty. Let's look at that. I think that's it. Right. So SBI, then PNB. These would be the two top picks from my side on the PSU side, banks. Right. So if you come to the private sector banks now, which like I said in the beginning of the IMR today, have been lagging a bit. This one is Axis Bank, well, definitely consolidating. after breaking out above 580. It'll probably go there, but might take some time to do that. So 650 life high, I would say it's definitely on track to get there, and once it does that, then perhaps a new life high. Let's look at others before we decide. HDFC Bank, well, that's already kept making new life highs for the last whole of July. Essentially, did mostly a consolidation for the last 3 weeks, and again, I think this is set to go further up. This is probably a stock which is going to at least 1300, probably even 1500 in the days to come, right? So HDFC Bank, stop loss should be below 1220. Oops, sorry to sort of didn't mention stop losses in the views before, and that's basically because those are all really good setups. I don't think stop losses in good bliss setups are a little difficult to be very sure about, because more likely than anything else, even if it does come down for some time, it's likely to just uh, just bounce back very quickly, because the long term, short term, and the medium term trends are very much aligned on the bullish side. Okay. HDFC, however, below 1220, 1210, you can put a stop loss. Now, HDFC itself is of course not a bank, but nevertheless it's discussed as the banks when you talk about the financial stocks in the Nifty. That's clearly consolidating, but the HDFC twins basically very much move hand in hand. The one thing between HDFC and HDFC Bank, what you're seeing is HDFC, that's a double top clearly now, 2 years apart, and once this double top breaks above 1400, then this is easily 1500 to 1600 in my opinion, right? And perhaps much bigger if you are willing to. Whoa. Okay, what a relentless move from how much? A 25 rupee stock in 2000. It is now 1,400 rupee stock. Wow. Lessons to learn in long-term wealth creation. Okay, looking at ICICI Bank. So that's been a laggard, no doubt about it, for quite some time. Okay, it's in that channel of May this year, an uptrend channel, and a week back or two when we said this was a good low risk entry point, because it was sitting exactly at the support level of its uptrend line, and if that it held, it would be a good place to enter. And if you one got in at that price, or at that price, there was just about less than 2% stop loss on that, and if anybody did that, well, you would be happy with the returns that have happened in the last 1 week. And there is a gap in this chart, right? So there is this gap here, and most oh, what happened? How come it is behaving like this? Oh, that's an arc I drew. Okay. All right, so just wanted to remove that so that I can highlight the gap clearly. So that's where it is. It should easily go to 265, and once it does that, then to 275. Whether it after that breaks that upper trend line and breaks 280, we'll have to wait and watch. But still a good low risk entry point. You could enter with a stop loss below 235. I know that's almost 5%, but for an investor that would be not bad. On closer scrutiny, this gap is not actually that compelling. It's actually probably a very small one there. You have a shadow. Right, so I think yeah, 265 for now, and then we will take it from there. Might as well remove that gap, not very significant. Then IndusInd Bank. So that's another one which has hit its life high, 1200 rupees. It's like a triple top in the short term. Notice how after breaking out that 1000, it's gone 30% up in the last one quarter, which is extremely impressive. And it should, sorry, 20% up, and it should, in my opinion, continue to strive higher. 1300, 1400 should definitely be happening on this stock. Maybe another 3 months. Volumes, bit of a concern, but overall I would think that this is pretty much okay. Kotak Bank next. Right, so that's, well, on the verge of breaking out, broken out, depending on how you want to look at it. Yeah, it has definitely broken out. We'll keep it there. That's where the highest close has been so far. This is another consolidation of about 4 to 5 weeks rather, that has happened here. And once it breaks 790, this is heading to 1000 in my opinion. 990, 995, 970, 2000 at least. Maybe a month or 2 or 3, but that's fine. You're talking about still 20% move on large cap bank. And if you might have noticed, they're doing quite a bit of aggressive advertising now on TV in India. So hoping to gain more market share, perhaps. Wait and watch. Right. So this is Kotak Bank on the way to 1000 rupees in my opinion. Okay, I think we've covered all the private sector banks in the, oh yes, bank. So that's just amazing, right? 900 to 1300, and it's just continuing to go up. What a massive bullish wave this is. Just amazing. On Yes Bank, and everything, indicators, all very, very supportive. If there's any hint or suggestion of trouble or weakness, it's in the volume picture, right? So volumes really not going up uh, as ideally one would like them to go up. So maybe some amount of reluctance in the market at higher levels is building up. Must therefore keep a very clear eye. But if you look at PVT OBV indicators overall, they are looking pretty much okay. So on a weekly basis also. So yeah, no divergences at all anywhere. This is definitely looking healthy. Where does it stop? That's really tough to say. Probably maybe 1500, perhaps 1700. But yeah, find a good move like this. Just hold on to it. This is what will happen. 900 to 1300. That's 30% almost. Right, more than that. Okay. So just to recap the bank side quickly, I think SBI number one pick, PNB next. Then on the private side, you could look at Kotak, you could look at Yes, and you could look at I think any of them. Tough to say which one. Okay. So one set of stocks which are good shorts, the IT side, one set of stocks which are good longs on the uh, on the bank side. If we look at let's look at pharma, because that's what we said, that it's perhaps at a good low risk proposition. We start with Sun Pharma, no particular order, and you can see that clearly it's actually going down on higher volume the last 2 weeks. I would perhaps leave it for now. Sun Pharma, it's basically in consolidation zone, not really broken down, but what 750? If 750 breaks, then this stock could easily go to 700. Okay. Lupin. Lupin looks like a good shot. Just looking at it. So that's definitely a flag. It's been sold off, reminding you of the Wipro situation 2 weeks back. This is, in terms of technical analysis, just almost a copycat ditto situation. Excellent setup for a short. Lot of good resistances on the upside. All the moving averages are bunched up on the upside very tightly on top of that, and very little chance that it's actually going to be able to go up. So 1600 psychological mark seems to be a good place to short. Probably will not come back there again in the coming week. So short now, and most probably till 1500 is a good possibility, right? So 1500, and if 1500 breaks, then I think in just steps of 25-50 rupees, 1450, and then 1400 is also distinctly possible on Lupin. All right, so it looks like we've got apart from IT, one more sector to short. All right, so this is Dr. Reddy's with a massive gap in its chart, and flirting with 3,000 rupees, right? Plus minus 10 rupees is the sort of pivot around which, and if it breaks down, more a question of when rather than if, and this is probably going to around 2820, 2850. Good place for a low risk short. Stop loss at about 3060, 3062 with a target of 2810, 2820, right? So, and quite possibly much lower. Then you look at Cipla. Well, that's the only one which is obviously and very surprisingly poised in a very different opposite situation. I think this was event related, some news from the FDA, if I'm not wrong, about some generics or something, I'm not sure. And that's why I just shot up. So this is one stock I do not want to be shorting on the pharma side, most probably headed for much higher levels. It's right now sitting on the 200-day moving average, that red dotted line of around 550. You can put a stop loss from a trader and an investor's perspective at around 535, 538. Watch for 570 to be broken out, and once 570 gets broken out, then 600 is quite surely on its mark, and then even 620 could be coming. So this is definitely comes as a surprise. One stock behaving very differently from the rest of its peers. Okay, that's why very important to know the story of each and make sure that your positions and your trades are uh, you know uh, what do you say, in line with what the charts are saying and what the price action is saying. So as you saw, another good lesson I think for today. Uh, 3 out of 4 are good shots. At least 2 out of those 4 are good shots, but there's 1 out of 4 which is a good long, all in the same sector, pharma. Okay, okay. And I think should also point out that this big candle happened on due to events. So event risk. Suppose you were short, you would have lost a lot of money, obviously. Or on the other hand, if you were long for whatever reason, you would be very happy. So those are event risks which are completely, in a sense, unpredictable, and you've just got to, take them in your stride. Okay. Right, let's look at metals, and then maybe we'll wind up. After that, metals. Sindalco, right? So that's been one stock that's really been doing exceptionally well. It was 70 rupee stock when we made a call on it. Those of you who have any should go back and look at the IMRs of March, April, when we spoke very strongly about going long on metals. And if you had done that, then, well, that was about 70, 80 rupees at that time. And now this stock is at 160 rupees, 100% return in about 6 months. That's fantastic. Let 100% happen over a year or even 2 years. That would really be exceptional. Well, this is approaching an important resistance level at 160, and it'll be nice to see what happens there. Right, so on say a monthly basis, this is a monthly chart now. Very rarely do we look at monthly charts on an IMR, but this is from 97 to date, so you're talking about 22 years, and essentially what you can see is that there was a massive move in 2009 recovery where it went from 40 rupees to 250 rupees, and essentially the last 4 years from 2011 to 2016 or 2015 or even 2016, I would say, are part of a big multi-year correction. And what could be just starting off is maybe another multi-year up move in metal spaces. Premature to say that right now, but it is distinctly possible that that is the case. You can see that on the volumes when we do the deep FA valuations review in the coming week, which will announce you know in the or the BIC mailing list and the SMS groups. I think we'll get even more a fundamental perspective of that, and whether what we are saying about a multi-year up move is potentially possible or not. And then essentially, so reason I wanted to give that perspective is, in that process you're definitely going to see some corrections. The stock could easily come back to 130, maybe even 120 at some point, but that will be a good time to buy more, like you saw from here at 104 to 85. That's about a 20% correction, and then from 85 you've got 100% return, right? So that's Hindalco. Watch for the resistance at 160. If it comes down, just accumulate, but once 160 gets cleared, then we are definitely looking at 190 and much higher levels. Okay. Then we've got just looking at the NMDC. Look at that move. Look at that move, right? We kept talking about it breaking 105, and it attempted that 2 weeks back, came down, and then from 100 it's 9% up, 108.95 in 3 straight days. And let's look at volumes. Fantastic accompanying volumes. This is wonderful, important breakout, psychological level, 3 digits, 105, and once it has done this, then I think a lot of space it opens up to go up in, I don't know, blocks of 10 rupees, I think. And the significant resistance next one is, well, let's see, there. So about 125. That itself is a 15% move from where we are right now. So it'll be good to see how it behaves there. So what 125, 150 next is where this stock is headed. And of course, not in a straight line, not in one day, not in 1 week. But let's take 2-3 months. That would absolutely be fine. Right. So NMDC looking good. Hindalco looking good. Let's look at Tata Steel, and Tata Steel continues to rally along with the rest of the pack. 220 rupee stock is already at 380. Broke 340, went to 380, corrected. It's at 392. 400 psychological mark. It will most probably break that. That's my view. Again, volumes, indicators, all that quite supportive of further up moves on this. And once it does that, then 440, 460 is definitely on its cards. So 440, you're talking about 10 to 15% move on Tata Steel. So that's also good. And we look at Vedanta, VEDL, that's really pushing through. Again, please notice the sideways consolidation for a month and a half and 170, and then it's broken out. Again, with volumes, that's all a good sign. And with this is now set to go to 200, 210, right? And once it does that, who knows, maybe even 300. So another stock which has doubled basically from 60 rupees, 60, 70 rupees at the beginning of the year to 180 rupees. So another 100% return. Again, I want to reiterate that if you had been part of the fundamental review that we did in April, we discussed all this and found out which were the sectors to really put your money in. And had you done that today, we would be sitting on, I don't know, 100% perhaps. So I hope you do join us for the next fundamental review coming up in the next week, 10 days. Okay. All right. So just let's look at autos quickly, and then I think we'll close for the day. Okay, still got some time. Tata Motors, so that's clearly struggling right now, but nice recovery from 280 to 500. What a fantastic double bottom at 280. Matter of time before it goes to 600. Just that nothing sparkling in that company except on the domestic side. Um, I'm not sure how the commercial vehicle stuff is going, but the private sector, private passenger vehicles stuff really not doing much, and looks like the other auto companies are really ramping up and doing a much better job. But anyhow, this is at a good above a good support level. 500 again, psychologically important number, might consolidate here for quite some time before it goes up. Can't be sure about that. Yeah, maybe there'll be others which are better. The setup is better. And okay, so let's look at M&M. So M&M already made a new life high in July, and it's just been consolidating after that. Really, nothing much else on M&M. So doesn't look right now very ready to break out, I would think, but will happen. Basically needs to go past 1500. The thing about M&M is, again, it's consolidated for a year, and then it's now just broken out, consolidating again, and once it breaks out, this time it is 300, should become 1700-1800 rupee stock perhaps by the end of the year. And then lastly, coming to Maruti. So Maruti did a lovely breakout, and well, it's got a flag, a pennant type pattern. So that's a half mask pattern for those of us who know do theory. And most likely this could easily go up another 600 rupees from current prices. So 5,500 to 5,600. By the way, there are rumors now today that it's launching a new premium hatchback called the Ignis in around or before Diwali Dasara time. And it's already got the new Baleno plus the Brisa, which is doing excellent numbers and quite decent waiting periods. And they're launching this Ignis, and if that really takes off, then that's another sentiment booster, at least for the company. They were apparently planning to initially launch it next year, but now they decided to launch it this year, so that could really be a nice boost for this stock in the coming weeks and months, definitely by October, I think, right? And well, for all practical purposes, August, one more week, and that will be over. Okay. Okay. So basically, that brings us to the end of today's session. So we're looking at short. Okay, short the IT space, right? So quite good shorting opportunities. You've got some good stuff in SBI, Maruti, and at PNB here, right? M&M, and then oh, IT. And what did we look? Oh yes, metals. How did I forget that? So that's a pretty good pick that you have, and if you got a 3 to 6 month time horizon, I would expect that on the basket of stocks we discussed on the long side only, you should expect at least 20%. I think probably more. Right? Always better to be a little conservative and then get more. Right. So still opportunities left. Nothing too late. Like I said, if you do review the previous two IMRs and then club that with today's IMR, I think you'll get a much better idea of the discussion that we've had. Only because in the last two IMRs we discussed, like I was saying at the beginning of the session, the Nifty and the Nifty next stocks altogether 100, out of which 100 I think we talked about 30 good, 20 to 30 good opportunities. Some have moved as you saw today, but there's also a good number which are going to move or have just started moving, so not late to the party at all. So I would urge you to consolidate all this and then take your view on that. Right, so we come to the end of today's session here. Thank you very much for your participation. The recording will be sent out by about 2 p.m. India time tomorrow, Saturday. And do send us your feedback on the contact information that you have seen on the screen. And I look forward to seeing you again next week, right? And if you have any questions or suggestions about the IMR itself, or things that you would like to be done in IMR, or for that matter at BIC, do let us know. Two initiatives just to point out. One is US markets. We just sent out a mailer yesterday asking for anybody who's interested, who's already either trading the US markets or is interested in looking to get into the US markets, because there's a lot of stuff you can do via the US markets. We are looking to maybe set up a small group within BIC to study and explore that. And then, like I said, we're going to do a deep fundamental review. Right. uh, of all the sectors in India in the next 1 or 2 weeks, and I do hope that you'll take full advantage of that, because the last one was really good, right? Yep. So that's it. Thank you. Have a great weekend, and I'll see you again next week. Bye.